Good morning, everyone. Welcome to the London session on TopstepTV. We have a very, very special guest here today. Everybody say hi to Coach Jay. You know him, you love him. Coach Jay, how was your weekend?
It was good, D. It was good. Got an hour of sleep back. We
Oh,
changed the clocks
yes.
back in the US this weekend. So got some nice rest this weekend. Did a call with some of our VIPs over the weekend as well, which was pretty cool. Got into like a little back testing session and then got off the charts. Was able to play some pickleball, uh, which is my newfound addiction playing pickleball. But it's been a good weekend. How was yours?
Yeah, it was a bit quiet. So I'm just going to make sure that everybody can see us and hear us for a second. Because usually yeah, all good. Okay, great. Yeah, so my weekend was super quiet. We did have house viewings on a Saturday, so that was a little bit chaotic, and then we decided to go to the pub with all the dogs because over in the UK we have this thing called the bonfire night,
Okay.
which is basically a huge fireworks display in honor of this guy called Guy Fawkes. Like, let's not go into the whole historical reasons of why that exists, but basically it's the day when UK does these like massive fireworks, and I live down the road from a park that has this huge spectacle across 2 days. And we figured it's a good time to get out of the house, go to a busy pub, and then the dogs weren't too stressed out or anything. And then we came home, and that was it. So, yeah, Sunday I spent most of the day playing video games, just chilling out, trying to reset. So, yeah, all good. Um,
Nice.
let's,
What
uh,
what
let's.
uh what video games do you play?
Oh, right now I'm playing Avatar. So I
Okay.
usually like open world, something that has many many hours of fun and games,
Right.
and it's a pretty good game. I'm not too keen on the movies. I mean the images are amazing,
Right.
but when it comes to the storylines, I'm a sci-fi nut. So when it
Okay.
comes to storylines, I want them a little bit more
Involved.
unusual. Yeah. Well,
Yeah.
whereas with Avatar, I kind of feel they're pandering to like the common person. There's just like, yeah, let's do some, evil versus good, and then some
Yeah.
romance. It's like really, but the game is good, so I'm enjoying
Okay.
that. Do you play video games at
Nice.
all?
Somewhat. I usually play sports video games.
Ah,
Just because it's easy to pick up and put down.
yeah,
My younger brothers tried to get me to play Call of Duty, but I feel like I'm too old for
yeah,
for all the movement now.
yeah.
So yeah, it's usually just a sports video game now.
So here's a fun fact. My husband is a huge fan of CS:GO, and he's
Okay.
58, so
Oh
it's
well.
never too late. Yeah, he's been
Nice.
playing for years though, like decades even. So yeah.
Got you.
All right, let's have a look at what's going on in the markets. Is anything catching your eye at all? I'm going to switch to your screen here.
We talked a little bit about copper.
Yeah.
But I normally don't trade during this time. So I am looking at some setups that have somewhat played out. If we look at copper overnight, everyone knows that I usually frame out the first 30 minute of the Globex Open, attach a VWAP to that. We just bounced off of that VWAP.
Mm-hmm.
So maybe 5 minutes ago, this was this was a really good opportunity
Mm.
to take a trade. But right now, I'm just kind of just scanning, looking at the S&Ps also, which may be presenting a similar opportunity where we have this first 30 minutes from the Globex Open. And if I attach a VWAP there as well, kind of holding that VWAP right now.
Yeah.
Um, yeah, outside of that, not seeing too much. What about you?
Yeah, so I was looking at the copper trade as well, and I think we may actually get maybe another opportunity. But full disclaimer, I'm staying on combines at least until about Thursday. I do not want to introduce too much risk because of the elections, and we have FOMC, so it's going to get crazy. I mean, crude oil already opened with a gap, so I think the uncertainty and craziness is going to begin. Well, you can argue it's already begun, right? So yeah, copper is very interesting to me, purely because we do have some levels from the options chains and stuff. So 440 is a pretty decent level. So if I go to the intraday time frame, so 30 minutes here. I saw the same thing that you did. So we're holding above overnight VWAP. There was a pretty good push earlier, and now we're kind of back to it. I have another level just under VWAP, which is my average session range low, and that's located at 3960 roughly. So that whole zone, because I work off of zones, I don't work off of any singular price points.
Right.
So that zone goes from 440 and then all the way down to 360. I mean, it's not a big zone, which is always a good thing. But yeah, so let's see whether we can get down there, and then maybe we can try like a combine trade. But just like you said earlier, I don't like to trade immediately at the open, especially not on a Monday morning, right? And
Right.
especially not on the elections week. So I want to see orderly price movement. So I'm probably not going to be going down to a 100 tick chart and trying to like catch tiny little trades and stuff like I do sometimes. I am probably going to rely on a 15 and 30 minute time frames to show me the way. Sizing down and maybe even increasing the stops just to make sure you're not whipped out in 3.5 seconds if something volatile comes in. We are definitely in danger of headline risk because there will be news floating around. And last time when Trump was president, we know that his tweets had a huge reaction.
Oh yeah, they did.
Yeah. And that used to annoy me to no end because it was like he would he would think of something that he wants to talk about, and it would send the markets into a complete disarray. And then as soon as that effect would wear off, the markets would ping back right where they started.
Yep.
It was, did you
Wild
trade?
time to trade.
Yeah.
I did.
Yeah.
That was a wild time to trade.
Yeah.
It brought us volatility, right? And we say traders love volatility, but the uncertainty of a tweet, and how quickly one can be sent out,
Yeah.
was a little annoying to say the least.
Yeah.
But it presented some opportunities.
Oh, definitely. There were definitely opportunities, but you know, by the time that you figure out, so at one point I started putting his Twitter page onto one of my screens because you suddenly had
Yep.
to, had to listen and watch what Trump is going to tweet about next. So I don't know whether we're in for another year like that. I do hope
Right.
that he's learned maybe last time, but we'll see. We'll definitely see. What are your thoughts on the elections? Do you think that's pretty much a done deal, or?
It's hard to say. It's hard to say. I think this is one of the. Let me try to be careful with this.
Yes.
Getting into politics talk, but
Yes.
one of the most polarizing, I'll say,
Yeah.
elections
Yeah.
that we've had in
Yeah.
the U.S. But I don't know that it's a done deal. It's really hard to tell. Two completely different candidates.
Yeah. Yeah.
And yeah, it'll be interesting for sure. Be
Yeah,
interesting.
and that's why it's going to get super wild, right? Because it's always wild. Like I've lived through quite a few elections now, both in the UK and the US markets, and
Yep.
it's I saw some people, I said on X platform, how are you approaching this week? And some people are like, oh, just, business as usual kind of thing. And the vast
No, it's
majority,
not.
of course, were clever. They were, we had experienced traders who were like, no, I'm staying on combines, or no, I'm probably just going to keep watching until Thursday, removing risk and all of that. But some of the traders, you can tell the inexperience because they're like, oh, I'm just going to keep going. It's like, let me know how that works out for you. I mean, it might work out in the same environment, but I know that every time you have such big events,
Yeah.
like the elections, that always introduces a lot of uncertainty. And even if you find a good setup, it doesn't mean that you're going to get a fill. Or if you get a fill, doesn't mean that you can exit the position. If something
Yeah.
decides to just come in, they're counting votes and suddenly everything goes crazy and you're trying to exit the position, you won't be able to. So that's the main risk. This is what we talk about.
It's a great point. Dakota was on slow markets last night, and if you just looked at the Nasdaq, and I know you don't trade the Nasdaq often, but if you look at the Nasdaq DOM, there was an 8 to 10 tick spread last night, and that's not going away before
That's
the election's
horrible
over.
for
Um,
That's like for I know the Nasdaq is a thinner market, but these are these are futures. You shouldn't have much of
Yeah,
a spread at all. Yeah, I can
right.
see it's got about a two. It's bouncing between 2 and 4 right
Hmm.
now. Yeah,
Yeah.
we
And
actually
like you said, for a sim environment, that's
yeah
okay.
yeah
But live trades, those are not uh, order books that
no.
I want to trade personally.
No. Now, speaking of order books, we actually have a question here from. No, let's see if I can read this. Krishla, like my eyesight is going. It's so bad. Um, Hi, Dee and Coach Jay. Good morning. Would you recommend level 2 data? Thanks.
I would. I use it for my own personal trading. I wouldn't say it's a necessity. It's more of a I use it as a confluence. I've taken one set of trading courses ever, and that I paid for, and their whole thing was reading order flow.
Yeah.
Where there were some classes that he did just kind of drills where we would read the order flow, read the DOM and the tape, and then draw the chart from the information that we were reading the order flow from.
Oh wow.
So for me, it's important, but I don't know that it's a necessity for every trader, right? You asked Dakota, he doesn't use it. Mohammed was on TopstepTV the other day, and I saw
Yeah.
he had one up, one down.
Yeah, he doesn't
So
use
it
it either.
depends.
Yeah, yeah. I
Yeah.
do use it, but I've got to say it wasn't probably until I don't know about 7 or 8 years into my journey that I actually started using anything order flow related. And
Okay.
partly it was because I was trading on large time frames, so I came from a swing trading background. And when you're trading, for 2 weeks, you're not looking for such minute movement and indicators of where the orders might get hunted for
Right.
liquidity. So it's much slower. It's really not that useful. But the more I got into intraday, the more I felt that I was missing something. And this is where I started looking at the level 2 data. Initially, it was time and sales. And then I was like, how can anyone figure out anything
Read
from
this.
this? Yeah.
Right.
It's just like so quick. And I was watching the ES ladder, I was watching CL ladder. And I was just like, I don't get it. And for a long time, I couldn't derive any information from it. But then
Yeah.
time, experience, like anything, you start seeing patterns. And then I was
Yep.
like, oh, that happened last time. Right. I saw the big order there, and then they kind of went through it. So,
Hmm.
okay. And then I started matching up whatever I saw on the ladder to see whether it matched with my particular outlook as well. So, for example, if we look at the copper trade, oops, ah, Christ, again, I always do this. I use the the escape button, and then
Oh, okay.
it just does something weird. So yeah. Okay, so now on copper we don't really have anything, but let's imagine that we are aiming for the long side, but then suddenly we start seeing a very big order slightly lower down, let's say around 440, 50. So let's say that we start seeing 40 orders sticking out at 440, 50. That wouldn't be a good thing for our position, because that means that they're going to hunt that. That's where the liquidity is located. And in that case, I would think twice whether I still want to be long there. So that's one of the ways that I like to use it. Or if I'm aiming for a long, but I don't think that this is a particularly good trading location, I might look at another next level down, just to kind of
Yep.
try and match it up with the fact that there is liquidity lower. So is there anything even lower so that I can kind of fish to the opposite side? So that's the way I like to look at it. Again, there's millions of ways to use it. I also use Bookmap, and that, it's down to personal preference. How deep down
For
the
sure.
rabbit hole do you want to go?
It's funny because traders ask all the time. They're like, "Hey, you can read the DOM, you read time and sales. Why don't you just use Bookmap because it gives you all that information?"
Yeah,
For me personally, just from a personal preference, I don't like the way Bookmap looks. It's just too
yeah.
much on the screen for me. So, but like you said, it's personal preference. It's all giving you the same information. And for intraday trades, great. Outside of that, you probably don't need it.
Yeah, yeah. Jay, we have a question for you. Did you try an indicator uh, to to who mark you that marks you first 30 minutes. I
I,
abuse.
I got it.
Yes.
Michael's question.
Yes.
Um, do
What's
I
he
use
trying
an
to say?
indicator? Do I use an indicator to mark out the first 30 minutes? It sounds like Michael's using an initial balance indicator.
So he's not
Um,
abusing it. He's using it.
no, I mean, if you use it for
Okay.
every chart, maybe you can say you're abusing it. But
Yeah.
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 So I do use an opening range indicator on. There's a Lux algo on
Oh
TradingView.
yeah.
Opening range indicator that I use. It's not available on TopstepX, so it's quick enough to just manually kind of just box out what the first 30 minutes are, and then go from there.
And do you use the 30 minutes as initial balance or as the opening range? Because they are a little bit
Yeah,
different.
yeah. So for the Globex session, I use the first 30 minutes. And then once we start getting into higher volume times, we start getting into New York session, then I go down to a shorter time frame, 3 minute opening range.
That's very interesting. I could never find a way to run some of my trades using the sort of opening range strategies.
Okay.
I don't know why. Maybe it's the nature of the products, like crude oil and stuff.
Yeah.
It's just a little bit more whippy during that first, especially NYMEX. Maybe a quieter session. Maybe Globex might do better. But I just never really found any statistical relevance that was long enough for me to go, okay, this happens quite a bit. Let's try and take it.
Yeah.
But again, that's just my own personal preference because I do fish for larger moves.
Yeah, for me, what it was with opening range, where I think when you first learn it, it's identify what the range is, and then
Yeah.
whichever side it breaks, take the trade.
Yeah.
And same thing, I was just like, okay, well, some of these work out really well, and then other times I'm either getting chopped up or the
Yeah.
market goes the other way. So I had to add things to it, right? So for me,
Yeah.
adding VWAP to it helped with you know trying to identify as early as possible what direction the market is taking. Um, but I agree. If it's just framing out the range and then buying at the low, selling at the high, or it would be the opposite, right? Usually you're buying a breakout, right? So you're buying at the high,
Yeah.
selling at the low.
Yeah.
There was not enough there.
Yeah. Yeah. But again, it depends what sort of trades you're doing. I don't
Yep.
do sort of quick scalpy trades. That's not my style. And
Right.
that's probably why I don't gel with that, because I always want to see at least a move that goes in one direction for a particular amount of time, ideally 30, 40, 50 minutes. But the opening range trades for me are always kind of more quick trades unless you get that trending day. But
Yep.
again, me knowing the stats on the trending day, occurrences and frequency, I'm really not that keen to take that after all this time trading,
Right.
because there are outliers. You're not going to get every day trending day you buy a
For
breakout
sure.
and it keeps going. So that's something that I'm like not that keen about. And then I would classify myself as more of a mean reversion contrarian trader first and foremost, even though I take all sorts of trades. But I think naturally I gravitate towards something that's gone away for quite a bit and now is sort of selling or buying back towards the mean or some sort. That's
Makes
where I'm
sense.
most comfortable. All right, let's have a look at some more questions here. Do things like copper react as much to the election? I would say yes, because obviously we have, copper is a metal and it is connected to the economy, but in a sort of counter trend way. So if the economy is doing pretty well, then the demand for copper is not going to be as much for some reason. And I'm sure you can go deep into the macro side of things, why that is. But just know that it's usually the opposite. So if you have very good, strong economy, copper will be going down. If you have economy that is struggling, then naturally copper tends to gravitate towards the upside. Again, I'm not a fundamentalist. I do use a little bit of fundamentals, but I don't rely that much on macro to show me the way, because I believe that macro side takes days and weeks to actually express its views on the market. But
For
it's
sure.
just something to know. However, I do think that copper will probably be pretty sensitive to this. What are your thoughts? Have you maybe gone back to see what happened, because I actually didn't trade copper that much during the elections. I traded gold. That was insane.
I did not trade copper either. I probably started trading copper, very recently.
Yeah, yeah.
I did put a trade on. This is actually not even an eligible combine. Tells you how much risk I'm taking off the table. I was, talking about the S&Ps, and we broke out of this first 30-minute opening range fairly early. We have VWAP leaving that range,
Yeah.
and just
It's
kind
holding.
of acting as a support. So I'm just framing out what this risks looks like right now. If I could risk, and these are micros, if I could risk the entire 30-minute opening range from where I'm entering here, it's about $125 risk to what I would be targeting 5,800 to the upside. So a little bit more than a 1-to-1 trade. So I'm looking at this, and ideally I would like a better entry, probably somewhere under VWAP. But just
Interesting. So, so you see what Coach Jay is doing there. So he's basically, instead of going, oh, I'm going to reduce my stops and then I'm going to hope to get a move in this direction. No, it's quite the opposite. Opposite. He's sizing down, widening the stops to give it time to work out and to slow things down, to desensitize the position. And then he's going, well, if it gets all the way up to the other side, I'll be happy with that. And I think that's the right approach as well. Instead of going, nitpicking with tiny stops, getting smacked on the face, and then going, oh, I'm just going to size up to make that up.
yeah.
It's terrible. Which I think some people might be doing. So please don't do that.
For sure.
Let's behave. Let's be good
Don't
little
rush.
traders, and don't rush. Yeah, follow the rules. Okay, we have more questions. So Alejandro Philip says, good morning. I have a question. What are the main differences between market profile perspective and ICT smart money concept? Oh boy. Okay. So do you want to go down this at all?
The main differences in between market profile perspective and ICT. So I would say the main difference is the language that's used,
Yeah.
right? So things are called something different.
But it's the same. Yeah.
They're pretty much this very similar concepts. I think the one thing, regardless of what strategy or analysis tool that you use, we're all looking at the same exact markets. So it's hard to completely reinvent something. But it's like a different language, right? Somebody might speak English, somebody might speak Spanish, and you understand that language. So that's what I think. The wording of the concepts are different. The concepts are fairly similar.
Yeah, I will agree with that. So the difference is that some of the concepts that have existed for many, many decades before ICT exploded onto the scene, it's just that, he's renamed things that have already existed. So is he the guy who created the algorithm? Well, not unless he's some sort of a vampire and actually lived about 300 years ago, when some of these concepts of supply and demand and the way the markets operate, let's be realistic, right? Nobody can just step out and make an outrageous claim that they've engineered the entire market. That's like, if you believe that, I don't even know what to say to that. It's a great marketing strategy, so I will bow down to the genius of Michael that he's managed to garner such
Great
big
marketing.
attention. Yeah, it's absolutely amazing, right? I suck at marketing, so seeing him do something like that is absolutely gobsmackingly amazing. But when it comes down to the concepts, even he himself credits people like Linda Rashke for, the turtle soup concept. And now everybody's like, oh, that's ICT turtle soup. No, that's Linda Rashke turtle soup, actually.
Right.
And, this is the slight issue that I have, that the concepts are completely valid. It's
Absolutely.
just that, it's just that the renaming of things to make them sound a lot more complex than what they already are. I don't really subscribe to that. But yeah, he does talk sense, and there's another thing of whether he's able to do execution, because execution is another can of worms. Not everybody can do it, but are his concepts solid? Absolutely. I have nothing against ICT. I think he's made a lot of good traders. So the main difference is just like Jay said, it's in the language, right? It's in how he calls, let's say, we might call it the initial balance breakout. He might call it the displacement, which again is a pretty good word. I like that word
Right.
as a very violent price action move that leaves an area and keeps going. I don't have a problem with it. I just can't sit through, whatever it is, 10 hours of ramblings about getting kidnapped and all of that. So that's the part that I have a problem with personally. But the concepts are solid. The concepts are solid.
Yeah,
There's no doubt.
concepts are definitely solid.
Yeah.
I said I was doing a VIP session over the weekend with a couple of traders and one ICT trader, and she's been trading for a year and a half and is trading those concepts, and holding trades sometimes 3-4 hours based
Yeah.
on some of that learning. So there is validity there. Like
Yeah.
you said, are we drumming up some of the drama, saying that somebody kidnapped me? Do what you got to do to market yourself,
Exactly. Yeah.
and go from there.
Yeah. Totally, man. Totally. Okay, so I think Jay already said answered this question. What time is the opening range? What are you doing for London? That's
Yeah.
actually a good
So
point.
yeah, for this trade that I'm looking at in the ES, I'm looking at the first 30 minutes of the Globex Open, right? So when the markets open up on Sunday, if I was looking at the London session opening range, this is when I would go down to a shorter time frame, and I would go to a 3 or 5 minute chart, and I'm looking at 3 a.m. Eastern time, which Dee, you're gonna have to help me.
Yeah,
An
it is
hour
that.
and a
That's the
2 hours ago.
yeah. So that is the London Open.
Thank you.
Yeah.
Thank you. So
You
yeah,
and
I
I
would
get
I would be
confused with
framing.
that.
So what time is that in London?
It's 8 a.m.
8 a.m. Okay.
Yeah. That is when the London markets officially open. But again, London Open is nowhere near as crazy as the New York exchanges and Chicago exchanges. It's pretty much a tug of war up until about 2 hours into it. So around about now, we start seeing the actual move that they want to take. It is a very rare day when you get just an immediate move that keeps going during London, especially on some of these products, but also even on DAX. DAX is it's traded on Eurex and London. And even DAX takes a while. Sometimes it will have one explosive movement for the first 30 minutes, and then things die out for the next 90 minutes. And then you get the real move. So it just, it's just a different animal altogether. So I never really rush things. Every time I come to trade, and, let's say we wind back about 10 years ago. So I still had 7 years of experience, but I tried to trade the open because everybody is like, oh, you should trade the open. Yeah, it's really great. You should trade the open. I could never make that work for me. Like, quite honestly, every time I tried to do the open, it would be a whole bunch of losses, maybe a couple of wins. And then I would have to dig myself out of a hole. And then afterwards, an hour and a half, 2 hours later, when I have more data and more information, I would be like, oh, now there's the obvious setup. Okay, great. Now maybe it's because it's me and the type of setups that I'm looking for. I don't look for scalps. So somebody who's more scalpery, maybe that will be fine. But I want to see a dedicated, smooth move away from a level that will last for about 30 to 90 minutes. And that's my style of trading. I've always said I'm not a scalper. If we're in a neutral day type, I might scalp, but for the most part, I look for mean reversions that last me a long time, or trending moves that are obvious and can have enough juice to kind of keep going for at least 3 hours. But those are very rare. They won't happen every day. So you have to be very careful with a trade location on large time frames and, the overall sentiment. Is there something to push it along? Like, for example, we have FOMC this week. That can open up the possibility for some equities trades that do go overnight. So what I do typically around FOMC is to look for a trade that is more of a swing trade. And if we're reaching some extremes, is there scope to run a trade that's going to last me for 8 hours? So, I still do that sort of thing. So it's down to, again, personal preference.
D, with some of your levels, and I think I've heard you talk about this before, but when you're kind of plotting out some of these hypos, when do you normally do that? Are you doing that actively? Are you doing like some weekend prep, figuring out the levels?
Yeah,
How does that work for you?
So many
Yeah.
years ago, I used to do the weekend prep, and then every evening I used to do like 2 to 3 hours prep. Now, obviously, over the years, that kind of compressed down into me sitting down at the open and then mapping out some levels. And when you've been writing out hypos for, well, I was probably doing them, let's say, for about 14 years. And then in the last sort of 3 years, I'm just like, okay, I can see
You
what's
can see
going
it.
on. Yeah.
Yeah, right.
So after 14 years it took me to not be required to write down all of my hypos, mark out all the levels. So usually what I do, I get up in the morning, I have a scan on what's going on. How far are we from VWAP? Are we opening inside value, outside of value, and how far from it? Where are my average daily range and session levels? And then I drag out some options data, for which now I use a service that's actually pretty good at simplifying that. But before I used to go to like bar chart or something. And
Okay.
then I used to look at like the levels with the highest option interests. And then I would mark those on the chart. And then I would try to match up my levels with whatever the options levels are. And those tend to be the strongest setups because you have the market makers engaging around those levels. And even if they act as a springboard, they will still cause a bit of a slowdown before they kind of smash through it. So at the very least, you want to know where the options activity is located. It's been very useful, especially in the last 3 years since COVID, when we have many more retail players stepping in. And they love the zero DT options, right?
Oh, yeah.
Why? Because they
Yep.
offer quick profits. They, the traders who step into the market as like complete newbies, they want to be rich yesterday, and they're like, oh, zero DT options. What do you mean? I don't have to wait for 3 weeks. This is brilliant. And of course, they gravitated towards zero DT options. Now, those are not real options. Let me just make that perfectly clear. They're just options that you're trading close to expiry or on the same day that they will expire, right? So it's not
Yep.
like you have an actual options type that only lasts for a day, which some people think is the case. So options on ES now, especially zero DT, they now comprise like 43% of the overall volume, which is a
Insane.
crazy amount. And now we have crude oil, new bi-weekly CME options, literally started trading July this year. And
Really?
yeah, and they say that they did it because they want to enable market participants to express their views quicker. I don't think so. I think we had crude
Like,
oil dying
we
a
know where the
death.
retail money is sitting, and we're gonna come and
Yeah.
take it. That's
Yeah, exactly. But also, we had crude oil. Something odd's happened to crude oil this year. So usually it moves 200 to 300 ticks. What happened in February, March, April, May, June, and then July was that it was pretty range bound. And then it had these odd moves where London was making most of the moves. And then New York, NYMEX, nothing. So it's like, what is going on here? And then all of a sudden now we have new bi-weekly options. And I'm like, is this your way of bringing in more liquidity? It's like, is this why we're doing this?
so that's what it sounds like.
Absolutely. So for better or for worse, we have to take it for what it is and just try and incorporate that into our analysis. I used to use Canadian dollar options for my crude oil levels, and then I would convert them and do the same thing. But now we have outright crude oil options, which in some ways makes my job a lot easier because I don't have to convert things from one product into the next.
Right.
So yeah, so for me, I don't really spend 3 hours anymore. It is literally like 10 to 15 minutes to set everything up, and I know what my setups look like at this point. That's not to say that I'm always going to be like, oh yeah, smashing it, successful, because I have mental issues, triggers, sometimes you go off your game, and then if you don't get ahead of it, yeah, you can have an underperformance. So it's not all levels. In fact, I would say that it's not levels at all. You can have the best levels in the world, but if you don't want to let go when the trade doesn't work out, that's a huge problem.
Agreed.
Yeah.
Definitely agree with that.
All right. So let's see what other. So I've got a dog that's at the window and she's like trying to bark. 7. No barking. So if you hear barking, then I'm gonna have to like mute myself. But Jay,
All
you're
good.
probably gonna be you're gonna hear the barking because I can't mute on the other
Okay.
side.
All right. No problem. No problem. Don't worry
Yeah.
about it.
All right. So let's see. Rich says, how do we, as new traders, learn a proper strategy when we have so many profitable traders telling us their strategies and see their indicators? Well, you just have to try it, right? So if you, like, you're not supposed to take somebody's word for it, and just because somebody's profitable with one strategy, it means nothing for you. It doesn't mean that it's going to be your style. It doesn't mean that you're going to gel with it. So I would just say, if you like something that you see and you connect, let's say, with the way Jay looks at volume, take that, back test it, then forward test it. See whether you find value in it and what sort of results you're getting from it. If you don't gel with that, try Dakota's strategy. He is very good at 3-bar reversals, right? And he's very good at finding swing trades as well. See whether you want to do that. So, you don't like that, too long a time frame, have a look at our reps trades. Nobody can tell you what's going to be right for you, because I don't know you. Nobody knows you. You know yourself. Jay, what would you say to someone who's asking a question
Yeah,
like
I,
this?
I agree with that, right? I think the one really good thing about TopstepTV, I shouldn't even say one good thing because there's a bunch of them, but
Yeah.
like I said, I paid for trading courses and it costs thousands of dollars. And if the information that was in that course didn't resonate with me, I wasn't getting my money back, right? The
Yeah.
great thing about TopstepTV is that you get so many different perspectives. And what I think is important to kind of gain from it is recognize how somebody comes to a decision, and it's consistent all the time. If you talk to Dakota about his trading strategy, it's the same thing every single time.
Yeah.
If you talk to me about my trading strategy, it's the same thing every single time. If you talk to Dee, it's the same thing every time. So if you don't have your own strategy, find one of those that resonates, and then work to get to the point that you are developing a repeatable process, and then that's it, right? So find whatever that repeatable process is for you, and work to getting to that point. There is no strategy that we can say is, hey, here you go, this is going to make you profitable. It depends how you look at the market, and that should be the goal.
Absolutely. Yeah. I will also say the mental triggers play a huge part. And many people are expecting the levels to do the heavy lifting for them without looking inwards. So nothing will work 100%. So you have to learn how you behave when you lose, and then get ahead of some of the negative behaviors. Like, let's say I have an idea that copper is going to go up, and I enter a trade far away from VWAP, and then I get smacked in the face. What do I do next? Oh, you start going on tilt and you enter more and more. You go into more on trade. Or do you sit down and just go, okay, let's wait. So which is a better option, to completely lose yourself, or just to go, right, that didn't work. I'm letting go of that idea because right now I actually don't have more data. So that one didn't work. Let's see what they tell me next. Isn't that better than going, oh my God, I lost. I need to get it back. Oh, double the position size, 100% increase in position size. Let's go again. Oh no, that one didn't work. Now I'm going to go in with 10 lots because now I'm really pissed off. That's how people get themselves into trouble. It's not the strategy,
For
it's
sure.
not the level, it's you. It's how you are able to, are you able to let go? That's a big thing. Do you get annoyed with a loss? But why do you get annoyed? Usually it's because you're trading too large and for
Yep.
the account size. There's no other
Yeah.
reason. It's like, oh, losses hurt. Losses shouldn't hurt. They should hurt a little bit, but it shouldn't be like half your account size for the day.
Yeah.
Yeah.
If you're still thinking about that loss a year from now, it was too big.
Yeah. Oh, definitely. Definitely. Yeah. It's
We
crazy.
have some of those. D. I'm sure you could tell stories about them, but you try to avoid those as much as possible, right? A loss is going to happen, but if I think about it more than the end of the day, it's probably too big.
Yeah. Absolutely. Yeah. I get criticized often for not trading with size on prop accounts because
Yeah.
the most size that I'm in on might be like 2 or 3 contracts, and that's only if there's a super strong setup and I've scaled into it, and now I'm looking to kind of take profits as we go towards the target. But normally I will be starting my day with like 5 micros or even 3 micros if it's a Monday and I don't want to dig a huge hole, especially not this week. It's election week, so that's why I'm going to be on combines. But you have to take that accounting side of trading into consideration, and many people don't. They just sit down and they're like, oh, I don't know whether I'm going to do 100 trades or 2 trades today. That's a huge inconsistency.
Yeah.
If you think about the variables, let's say that you're writing a piece of code, because I've written quite a few mechanical algorithms in my day, and you have to define consistency rules, and you can't just let the algorithm to open up 100 trades around the same level. You have to say, well, actually, if you're already in a trade, don't open another one. That's step one. But then even if that trade lost, you still have to go, well, for that day, do not go over, let's say, 2 trades per level, and then the maximum amount of trades, 3 per day. So that's always been my starting point on one product, to not overtrade. And you see both me and Jay, we do trade multiple things, so it's a little bit different. But it's also because we've been trading for a long time, and we can have a look at a chart, and we can actually see whether the level is strong or not, because we're looking for a very particular outlook, very particular day type, setup, and we're quite adept at doing that on most days, right? Again, nobody's perfect. We're not robots. However, over time, it's a winning strategy, right? And that's what you should think about as well when you're sitting down to trade. You're not thinking, oh yeah, I'm just gonna do 5 trades today. Some people do, but a lot of people don't. They just sit down and start clicking buttons. So how about a part of your plan, define how many trades you're allowed per product today, and per day as well. If you trade multiple products, don't go over 5. That's too much, And if you're only trading NASDAQ, I would say try 3. It's just one product. How many
Yep.
opportunities can you possibly get?
Yeah, I think that's a good way to look at it. How many, if you had to, at the end of the day, and that's part of the reason Coach Paul and I do at the buzzer, because the markets are not moving, and we get to look at how many real good opportunities did the market present, and then where did you fit in that, right? So if the market presents 2 good opportunities and you're taking 20 trades, you're probably over trading, right? Traders ask all the time. It's
Yeah.
like, okay, well, did you see 20 really good setups here,
Yeah.
or were you trying to make money? And that's the difference.
So here's the thing. When I was still a novice trader, I was in a prop firm, and I sat next to this guy who was, I'm going to say, not very nice, but he had a good point, right? So sometimes you need that. You need some tough love. So anyways, I was trading crude oil, and he was trading crude oil as well. So it was a trending move. So I got in on a trade, and then I got out, and then I got back in again. I got in. So, just kept grasshoppering, overtrading, classic overtrading, because I thought that's what you're supposed to be doing as an intraday trader. And anyways, I was in, out, and then at the end of all of that, he goes, right, so how many ticks did you make out of that? And we all spoke in ticks, you know, this whole monetary values thing.
Yeah.
It's not scalable, and everybody trades different size accounts. So we spoke in ticks. And I looked at my net sort of P&L, and I was like, yeah, I made about 10 ticks. And he's like, right. So you did how many trades? 8. It's like, yeah. So while you were doing that, I was on one trade and I made 60 ticks. So your broker is very happy right now. I was like, whoa.
Yeah.
Okay. But that got me thinking, because I was like, why am I suddenly doing this? I'm a swing trader who can hold trades for 2 months if necessary. And here I am now clicking buttons. And that's where my whole mindset started to switch to what intraday trading is all about. And again, he wasn't a very nice guy, but I'm forever grateful that he gave me just that one single sentence. It was kind of like a bitch slap. You know? It's like, stop doing stupid things. And I
Right.
needed it. I really needed it. And yeah, so here we are. All right, so copper trade that I'm stalking, still sort of consolidating, so I don't think I'm going to be getting my setup. I want to get it closer to 420 and 440, at least. This is too far out for me. How's your trade going, Jay?
It's kind of stalling out a little bit.
Okay, well, it's
Right
still
around this
crawling.
57.70. It's working.
Yeah.
Maybe I shouldn't have put this on my coach's combine and put it on the one that can actually is eligible for funding, but it's okay.
Yeah,
The
but you
concept
never
is
know.
playing out.
You never
Exactly.
know. Yeah,
Do
exactly.
you have a question here, and I'm interested as well. The indicator that you have at the bottom of your charts is the DMI.
It is,
Can you
yeah.
show the setting and explain how you use it a little bit?
Yeah, okay, so I got this from Robert, actually. He uses it on a slightly different setting than I do, but I found for my purpose, I needed something that was even more responsive. I use the DMI indicator on a 100-tick chart, typically. And my setting for that, so let me just get this back. My setting is DI length is 5, ADX smoothing is 10. I believe that Robert has it on 10 and 20 or something like that.
Okay.
But yeah, I just found that that was too slow for what I was trying to do, because I already have a level, and then when it starts to turn around, I just want this to be super responsive and to actually show me that explosive movement up immediately. And then, depending on what I'm looking for, I might actually go back up to like a 5-minute chart to a more time-based thing. And then I use it in combination with my little 90 MA ribbon. So for me, it's nothing more than a timing tool. So it's not
Okay.
really a level. It's not, you know, looking for a random pump somewhere. I already have an idea of what I want to do and where I want to do that. So, for example, now on copper, I know that I would like to get involved around 440 all the way down to 460. So it's like a loose zone that I'm looking at. And then if we ever arrive there, I want to see a quick, decisive move away from that, which will show up on the DMI. It's going to start rising, but also if we are below the ribbon, and if it's against my position, I might wait, because it means that the
Okay.
movement is accelerating to the downside, not the upside, which is what I'm looking for here. So in a way, you can use it to get you out of a trade as well. If you're on a trending move and then it starts to lose steam, and then you also see the ribbon failing to give support to the price or resistance, that's your exit. So it's like, it's the end. For now, they're really not pushing it further. That would be something that I use as an early exit.
Okay. Makes sense to me. Thanks, Dee.
Yeah. I saw the MACD question as well. I don't use MACD. So I don't use divergences in that way. I might use a divergence between a volume delta and price, but I don't use sort of lagging indicators for that. I suppose delta is a little bit lagging, but you know, if you have overwhelmingly positive or negative delta and the price is not necessarily moving anywhere for a while and the delta keeps building, that can open up a possibility for either a short squeeze or a long squeeze, depends on what the market is doing. So that would be the only divergence that I would look for. Do you use divergences, Jay?
I don't. I don't.
Same. Yeah. Yeah. It's just too laggy, right?
Yeah.
It's like by the time a divergence comes, it's already been and gone, right? It's like I've got my trade and I'm out, and now people are like, "Oh, there's a divergence," and I'm like, "Welcome to the party." All right, let's see. Good morning.
Scanning
Can
around.
someone explain how and what to anchor VWAP on the range for the range break? So where to anchor VWAP on the range break? Jay, that's right up your alley.
All right, awesome. So what I'm looking at for anchoring VWAP, the first 30 minutes of the session open, right? So if we look at our charts, everyone's in a different time frame. So I'm just going to say the first 30 minutes that we can trade again on Sunday. I'm framing out the high and the low of that first 30 minutes, attaching a VWAP there, and looking for that VWAP to break out of the range. I think that's probably as simple as I can put that. And then if you look at any other session opens, we talked about the London session open, which is 3 a.m. Eastern time and 8 a.m. London time. Same thing. So this is that candle here. For me, it's a 3-minute candle because I use a 3-minute chart. You may use a 1 minute, 5 minute, 15. And then I'm anchoring a VWAP to that session open and looking at the same idea, right? So the way I'm looking at this trade right now is the first 30 minutes, the Globex session, that VWAP is moving up and to the right, and that's why I'm in this trade currently. But since London opened, we can see this VWAP is pretty flat. So it's not giving me that kind of momentum move that I'm looking for yet. I'm okay sitting in the trade because in a higher time frame, we still are trending upwards. But for right now, there's not enough volume coming in to push this market in either direction.
Yeah, and it probably won't be any until the overlap, which is the feature of
Right.
London. Yeah, so many people get so involved in a momentum trade for London, and it's like that
Yep.
really doesn't happen that often.
Doesn't
so we
happen.
need to adjust our expectations a bit. So how is it possible that Dakota is back in the leaderboard so quickly with such a high P&L? What is the difference between him and you? Does he take more risk? Yeah, I mean, he likes to take more risk. So from what I've seen, Dakota is not, not a stranger to using 8 and 10 lots in combines and XFAs. I'm, at this point in my life, a lot more risk averse, let's put it that way. And if I trade larger, I need to have 6 or 7 figure, ideally a 7-figure account if I'm going to do double digits. But some people are, able to absorb that kind of risk. When I was younger, don't get me wrong, I was doing the same thing. So, for example, when I was working for one of the prop firms, they were like an offshoot of sort of First New York in Europe. And basically, they push size. So you would make 25 grand in a month. Well, for the next, for the next month, they would already expect you to be in the double digits, just using that P&L as your risk allowance. And then they kept pushing it. But they were the type of a firm that would pay you out 20% of monthly profits. And then maybe if you did well over a year, you might get a bonus of about 10%. So there was nothing like, 90% and stuff. So you would have to make them, a lot of money. And yes, you make a decent chunk of cash for yourself. However, it was a whole different environment then. And they push size. So at one point I was trading 120 lots in crude oil, which is a crazy amount of size. And I'm telling you, entering a 120 lot in crude oil, you cannot do it in one go. Okay.
No, you can't.
So
you can't.
yeah, if I go to the dome, okay, now it's out of market, but let's just see what's happening. Yeah, so if you look at the dome, so you have 39 contracts, 27 contracts, 34. So where you start to have an issue entering larger lots is when the lot size overshoots whatever is available on a per price basis. So all of these you can look at as units, right? So if you try and execute 120 lots, well, you have to eat up all of these, right? So, and that's where the liquidity is. That's what we mean. It's like, they're grabbing liquidity. So that's very difficult. And therefore, you have to partial your entry. There's no way to execute. Like, you try and smack in 120 lots in crude oil, it's just going to go boing, boing. It's like order rejected, right? And then you have to start thinking of some slightly more elaborate ways to enter. So this is where something like Dolby's way of entering, where you're entering around the zone, so you have a very nice idea of where the price should go. And I actually developed a way to partial myself with the first lot of trades, like let's say exactly where it is now. Then when it dips down to my MAE number, maximum adverse excursion number, it's a number that most of your trades will dip into, but they still end up as winners. And I use that as a potential scale-in area. And for me, on something like, let's say, crude oil, that's between 18 and 22 ticks. So that would be my second add-on. And then the third one would be when the market already turns around and going my way. But it can't be too far away because you're going to screw up the average price too much. So I have about a 10 to 15 tick difference if it's moved away from the zone completely for my final scale-in. Now, that final scale-in, depending on what I'm trying to do, will be, either lots of 5, so 5, 5, 5, or it would be 2, 2, 2, or 1, 1, 1. It just depends on the size of the account. However, for me, at this point, I just cannot justify trading larger than about a 1 lot or 2 lots when I have 4.5 K of drawdown right off the bat when you sign up, or 3K on a 50K. But some people have more risk appetite, and Dakota is one of them, and that's how he does it. So just because he can do it, it doesn't mean that all the rest of us should be chasing. And I'm done chasing anyone. So I trade the way I trade. It might be too slow for you, but I'm not in a rush. In my life, I've done what I needed to do. I'm not a spring chicken exactly, and for me, risk comes first at this point. Yeah. How about you, Jay? What's your...
No, I thought that was a great answer. I think Dakota is a great trader, as many of us are. Does he accept more risk? Does he take on more risk? Absolutely. And there are benefits and drawdowns to that. He also made it a very specific goal to get to the top of that leaderboard.
Yeah.
So you're seeing that play out as well. I think everyone sets goals for themselves. And I think this is important for, everyone that's here listening as well. Establish whatever your goal is and do that. Because not everyone plays for the same reason, right? And not success for everyone is not going to look exactly the same. And if you're trying to do what someone else is doing, just make sure that that's where you actually want to be for yourself, and not because they're there. Because you're going to find yourself in a very interesting spot if you realize, like, oh shit, I don't actually want this.
Yeah. I just want to point out about Dakota, he's a very special individual. He is only 31, but he is not your average 31-year-old, right? If you've ever heard him talk about his life, he sounds like he's about 50. He's like, I worked in a copper mine, and I had a logistics company. It's like, when did you manage to have all of this at 31 years of age? And now he's a director of a supply chain company, and he knows a lot about it. So don't neglect the abilities of a person outside of trading. And Dakota is definitely somebody who's very driven. He's obviously a high achiever. And don't compare yourself to him. He's an odd one out, right? So most of us who go into trading, we generally have a pretty interesting background, because you don't go into trading just because, you're here because of intellectual stimulation, especially not when you've been doing this for as long as me and Jay, right? And Dakota as well. He's been trading for 15 years. Jay, you've been trading for how long?
12.
12. I've been trading for 17. None of us are here kind of starting yesterday. So you're seeing a combination of skills that have happened well over a decade, right? And some people come into this game, they started trading like 2 years ago, and they expect that they're going to have the same sort of skills. And at the same time, they suck at personal finances as well. They're like, in debt up to their eyeballs. They don't own any houses, and you have to look at your life and how successful are you in doing something extraordinary away from the markets in order to do something extraordinary in the markets. Okay. It's a very not much talked about topic, and it's uncomfortable because people don't like to look inwards and go, yeah, I suck. But at the same time, it can be an opportunity for growth and betterment away from trading.
Yep.
So yeah, let's see if we've got any more questions, and then we're going to finish it up. Echoes of Nature channel says, are you going to be the VIP coach, and if so, when this time? So with me and the VIP coaching, I already have my coaching service, and frankly, I'm not sure that I would be able to dedicate as much time as some of the coaches already, like Jay, Ray. Everybody spends so much time, Coach Paul, they spend so much time and energy doing classes in Discord. Jay, tell them a little bit about how much work that is.
Yeah, it's a decent amount. It's a decent amount. Right now with the VIPs, I'm doing 2 to 3 sessions a week in as well as the chat. It's like Dee is saying, she has her own personal coaching. It's that just under Topstep's umbrella. So it is a lot. It's very involved. We try to get as close to these traders as possible, as much as they want interaction with a coach. It is very involved. The VIP program is going to continue to grow. I hear Topstep mentioning bringing on new coaches as well. So look out for that. But yeah, it's a lot. And it's as much as you want it to be as well, in that VIP program. I tell the people in there, ask as many questions as possible, because that's the way you grow. Dee, I had a question for you. Copper, you were looking for this pullback to 60s.
Yeah.
Is that right? Is
Yeah.
that kind of what we just got?
Well, I would like to see it below 440. It was
Below 440.
439.60. Yeah. It's not quite there yet. To be honest, I'm okay missing out on the copper trades. Yeah. I mean, I've been on a 12-day heater in an XFA, so
I saw that.
A few days rest is probably a good thing for me, because I think I was so focused, and I was tracking my mental side of things, and I'm like, okay, let's jump from one thing, and I do trade 5 different products, so it's been it's been a great month for me, but I do feel a little bit of a burnout. So kind of stepping away from the accounts that do have risk in them, it's actually going to be a nice change for me this week. So I'm just going to chill out, maybe miss a few trades and not obsess over it too much.
Makes sense.
Yeah. So
I've heard Hogue say that if he's ever found himself on too large of a winning streak, he just ends it himself by not trading, because it does get there. So really good stuff.
Yeah, when he gets himself into drawdown as well, because I used to talk to him a lot when he was my risk manager when we first got into Topstep, and every time I asked him, how do you approach drawdowns? What do you do? And he's like, I go to the woods. Which I thought was a great thing, because he goes to reconnect with nature, and but just the way he said it, I go to the woods, and he has the same thing with the biggest day, right? He's very aware of what that does to him. Now I can't say that I'm like, oh yeah, I'm super happy, yes, I made like 9 grand and whatever else in my live account in a month, because to me that's it's significant, right? But it's not any kind of life-changing money at this point. It's nice,
right?
But to me, it's more the fact that I've been able to keep that going for 12 days. And now I'm feeling a little bit of dopamine thing, where it's like, yes, I'm back. And that's a slippery slope. As soon as you start thinking that, you're going to get smacked on the face. So we need to chill out, let the
play
dopamine...
defense.
Yes, play defense, absolutely. And let those dopamine levels kind of level out. And then we can maybe get back to trading. But yeah, 1 week of not trading live, I think is going to be a good thing for me. So yeah, if you're here to see me click buttons this week, it's not going to be that much button clicking.
I took care of it for you today. I put on a 1 lot micro.
Thank you. Yeah. But still, it's a good trade, and it's working out. And yeah, it's a great read. Nothing else to say there.
Thanks.
All right, so a couple more questions, and then I'm going to finish it up. So Francis says, what is the best time for scalping the market? Again, I'm not really pro scalping, but I would probably say when there's enough volume to do scalping. What are your thoughts about this,
Yeah,
Jay?
I would agree with that.
Yeah.
It also depends on how you define scalping, but uh, this trade, for example, has moved 8 points in the
Yeah.
past hour. Not now, right? If I'm looking for a very quick move, I'm not going to do it
Yeah.
in low volume times.
Yeah, patience is required if you're going to trade during low volume times. So if you're looking for quick moves, momentum moves, you need that volume. And that's not going to happen at this time of day. So you need to aim for the times of day when there's most movement because of most volume being traded. All right, and finally, last question. Question for both Deeyana and Coach Jay. If you had something to say to your younger self regarding trading, what would it be? It's a good question.
Slow down, and you don't know everything. I'd say that a lot earlier than I did. Where I think when I started, I had some just beginner's luck, if you want to call it that, and then not realizing that I didn't know as much as I needed to know. So slow down, think about the money less, and just focus on process.
I would say to myself, don't trade FOMC because that was one of my biggest losses ever. And for some reason, I thought I saw a setup and I was trading for a prop firm at that point. It was a big loss. I mean, we're talking like 6-figure loss. Luckily, at the time, it was like about a 10% of the overall balance. So not a disaster, but psychologically it was very, very difficult. And nobody
Yeah.
told me, right? They were like, yeah, you shouldn't trade, into FOMC, but you can trade after. And I was like, oh, great, brilliant. And I thought I saw a setup. I entered. I couldn't exit the position.
Oh
And
wow.
initially it went into it went towards my target, but it never filled it. And then it just started reversing. And I kept clicking to get out, kept clicking it wouldn't fill me. And then it went all the way into negative and smacked me on the face for a good quarter mil. So that was like, if I didn't have a heart attack in those sort of 10 minutes, I never will.
Yeah.
So yeah.
Bob R put a good comment in here. He said, "How about don't trade with your own cash? Use a prop firm." I would agree with that as well, right? Especially if you're a new trader. But even then, I think what we're saying applies, right? Regardless of
Yes.
whose capital you're trading.
Yeah.
If you say, "Well, it's not my own money; it's a prop firm," so it is your own money, right? You did have to pay for that prop firm account, so treat it the same way.
Yeah, another thing about that is that, oh, don't trade with your own cash. Yes, great point. However, back in the day, trading with a prop firm didn't necessarily mean not trading or not putting up any cash, because if you come from a non-financial background, a lot of the programs that were kicking about back then still required you to pay money for an apprenticeship. And then at the end of that, you would get a funded account. And those sorts of programs were expensive. They were like anywhere from 5K up to 25K, depending on the length of the training that they would give you. If you came from a verified financial background and something, maybe you could have gotten in there through like nepotism and stuff. But I was a session musician. I had degrees in music, nothing to do with finance, so that was not an option for me. I had to go through the same thing, get a program, and then they would fund you at the end of it. So that's how I got into prop. Now it's very different. So we're very, very lucky to live in the golden age of prop firms where the entry cost is so low. But at the same time, like Jay says, it's still your money, right? It's not like, oh, it's not your money. You paid for it. Yes, it is an account with quite a bit of leverage compared to what you paid for it, but it's still your cash. You should treat it with respect. So I'm going to leave it at that. Obviously, you have Coach Jay for At the Buzzer. So catch him doing that Monday to Friday with Coach Paul. If you've never seen Coach Paul, he's amazing. He's such a dark horse. Such a dark horse. He's like, oh, yeah, very nice, very nice. Is your market button broken?
Yeah.
Like,
I hear
wow.
that at least once a week. When I'm thinking about taking a trade, he's just like, "Does your market button not work?"
Yeah,
Like, what's
it's just so funny. Yeah, I love Coach Paul. He's so awesome. Gets straight to the point. No nonsense. No bullshit. It's brilliant. Okay, so this is it, guys. Thank you for hanging with us. If you found any value in what we're doing here, give us a like and please subscribe to the channel if you just kind of randomly stumbled onto the live stream. Yeah, that's it. You might want to take time to leave us a bit of a review on Trustpilot. So I'm going to put that in the chat. Is there anything else I need to say? I think we are done with the plugs. Yeah. Okay. So enjoy the rest of your day. Don't do anything silly. It is the elections week and FOMC week, so it's going to be a big one. If you feel that you are underperforming, immediately switch it to either the practice account or combine, depends on what removing risk means to you. And yeah, until tomorrow, I'm going to do the same. And then let's see what happens for elections. It's certainly going to be, let's say, an interesting week. Coach Jay, thank you so much for joining me. Any last words?
Thank you, Dee. No, I think you just said it all. Trade well, trade smart. Don't be in a rush to make decisions. If there's a good opportunity that presents itself, take it, but make sure you manage risk, and that might mean not trading at all this week.
Yeah, absolutely. Very well put. Thank you, and we will see you again tomorrow for another episode of the London session on TopstepTV. Take care. TV? TV. Anyways, take care, guys.